All right, that was Chairman Moman Olumide Adeosu. Now for commodities market update, let's bring in Adesola Simoni right there. Great to have you, Adesola.
Thank you for having me, Ladi.
Good morning. So we see oil prices, currently trading above the 7-year high, $88 per barrel and heading towards 100. Yeah, we've been looking forward to that $100 mark for a while now. How's it looking for you there?
Thank you for that question, Ladi. So like you've seen, oil has really had a bullish run this year, increasing around 12% year to date. And this week alone, it has increased about 1%. What are the key drivers of it? One is majorly the return or revival in oil demand growth. And we can see that revival in oil demand growth to pre-pandemic levels. And we can see that in the US crude stockpiles, US inventories now are at record lows. We also see supply side factors such as one, OPEC's inability to increase production sufficiently. We see many countries like Nigeria and Angola who are struggling to increase their output. We're also seeing geopolitical tensions such as the issue with Russia and the US over Ukraine. We are seeing also geopolitical tensions in the Middle East. All of these are threatening, the supply of crude, and they are, pushing prices upward. And what does this mean? Well, one, if oil reaches $100 per barrel, then it might also increase energy prices, which is driving inflation in many countries, particularly for oil importing countries. And this also has implications for inflation globally, because it would now force central banks in advanced countries to act more aggressively in terms of their interest rate hike, and that would tighten financial conditions globally and can lead to capital flight or capital outflow from emerging market economies like Nigeria, and that would then pressure our exchange rates and our external reserves. In terms of going forward, many more, like you said, many more big banks and oil majors are seeing oil reach $100 per barrel. But some are more conservative, like Goldman Sachs. They see oil reaching $100 per barrel in the third quarter of the year. But some other firms see it reaching $100 per barrel in a few months' time.
All right, see, well, the bulls seem to be in control right there in that market. But, here in Nigeria, a recent report by the National Bureau of Statistics showed that, the cost of transportation increased by 283% to 479. Talk us through the key points in that report.
Okay, thank you. So if you look at, looking at the report, if you look at a bus journey within a city, like a bus constant drop, for instance, like from Ikorodu to Victoria Island in Lagos, Nigeria, that has increased around 5% month on month, but around 33% year on year to 446 naira 50 kobo. If you look at intercity journey, bus intercity journey from, let's say, from Lagos to Ibadan or Lagos to Ogun State, we've seen that increase 5% month on month. That's comparing November 2020, December to December 2021, month on month, and then December 2021 compared to December 2020 year on year. That has increased 5% month on month and 20% year on year to about 2,600. If you look at the motorcycle drop, constant distance motorcycle drop average in Nigeria, that's increased around 5% month on month and 28% year on year to about 250 naira per ride. Now, if you also look at waterway transport, it has increased around 2% month on month and around 12% year on year to about 862 naira. Now, here is the interesting part. If you look at air travel, like from Lagos to Abuja, for example, that has increased only 3% month on month and 4.8% year on year to around 36,000 naira. This, to me, suggests that the mode of transportation used by the average Nigerian has increased significantly, while, for the average of the poor Nigerians has increased significantly, both month on month and year on year. Meanwhile, the mode of transport for the richer people, for instance, if you look at the price of fuel has remained constant around 165 naira per dollar in the period, 165 naira per liter in the period under review. But also, if you look at the cost of air flights has also remained, is increased only marginally, around 3% or 4%. So for me, this suggests that the cost of transportation for poor people has increased, which further constrains or contracts their disposable income. Also, the cost of logistics transportation has also increased, and this has implications for inflation.
Right, quite interesting, interesting one there. But the NNPC spent about 100 billion now on refinery rehabilitation last year. Yet no state-owned refinery is working. What does this, mean in context of this fuel subsidy discussion?
Okay, so for me, we've had this discussion last week, Larry.
Yeah.
Bringing Nigeria's refinery up to speed, or improving or boosting Nigeria's domestic refining capacity is the necessary condition for subsidy removal. Because if we are not able to boost our domestic refining capacity, if we are not able to significantly reduce the imports of petroleum products into the country, then it will be extremely difficult to remove fuel subsidy without having strong revolts from labor and etc. Now the problem we have with refinery rehabilitation is that we've been having this discussion for ages. A lot and billions of naira have been pumped into these refineries, but yet they are still not working optimally. And that's still not working optimally. And this brings up issues around value for money. We are spending so much money to rehabilitate these refineries, and still they are not working optimally. For example, to my knowledge, last year, I think in March last year, the federal government approved $1.5 billion for the rehabilitation of the Port Harcourt refinery. The Port Harcourt refinery has, I think, 2 plants with a combined capacity of 210,000 barrels per day. I am cautiously optimistic that after it has been rehabilitated, it will be able to produce some crude at the installed capacity. But if history is anything to go by, if you look at 2015, I remember 2015 when the Minister of State for Petroleum, then Dr. Ibe Kachiko, was also on this, trying to rehabilitate the refineries, and they worked for just a little bit, and then we had these issues of efficiency again, producing at only about 30-20% of their capacity. So that's just the big question mark.
It's quite a huge one. All right, let's look at other matters now. You see the central bank new guidelines there, slash the ATM withdrawal charges and interbank transfer fees. What's happening there? Because recently I talked about some of these fintech companies actually slashing fees. They call them bank of the free or whatever. So is the central bank towing that line?
It is possible. If you look at the guideline, it was a 76-page guideline, and part of the reason for changing the guideline was to reflect market reality. So this fintech could be some of the market reality that the central bank was talking about. But if you look at, it was a very, very long guideline, but some of the interesting points is the decline in ATM charges from 65 naira to 35 naira. So on your third withdrawal from another bank's ATM, I think it's now the rate is now slashed from 65 to 35. Also, interbank charges is down from 300 to a maximum of 50 naira per transaction. So for banks, it is not good news at all, because definitely it's going to hurt their revenues.
Exactly.
It's also going to hurt their profit. But for the average guy on the streets, it's good news in terms that it's going to increase his disposable income a little bit. Even if it is a little bit, it's going to increase his disposable income. But also, this has implications for the what we call the velocity of money, the rate at which money exchange hands. With this slight reduction in the cost of withdrawing cash or having cash at hand or transferring cash between banks, I think it's going to increase the velocity of money marginally.
Right. Okay, so now the external buffers, now we see the level of the external reserves is declining steadily. Now we've gotten back to the $30 billion range. What are the implications for the exchange rate?
Currently, level of external reserves, I think about $40.1 billion. And at this current rate is edging towards $39 billion, like you said.
Yeah, if it gets to that 30 level again.
No, I think it's It may get there. It may get there, right? But I think that why we are seeing this is because we are not able to, even though and the oil price, we are operating in the elevated oil price environment. I mean, we said that oil prices are currently
Yeah.
trending
Why
at
aren't we?
above 7 year
We're
highs,
not producing to get
but we
to
are not
enjoy
producing
that
enough. I mean, we
to enjoy
are
that
not
rally.
reaping the benefits. We're not reaping the benefits. Also, we are paying heavily for importing PMS as the price of oil rises in the oil market. The landing cost of PMS in the domestic economy also rises. So we are paying more for import refined petroleum products, but also we're not getting the full benefit of the higher oil price. And this has, like I said, implications for the external reserves. Definitely, the accretion to the external reserves is going to be low, is going to be slow. But also, there's this expectations of a tighter monetary conditions in the global economy. And like I said, if because of the higher oil prices and inflation in developed economies, if the central banks in advanced economies increase their interest rates more aggressively, then we might see capital flights away from emerging market economies, and this is going to pressure our exchange rate. It's also going to pressure our external reserves, and it's going to impact the ability of the central bank to continue to inject FX into the market.
Yeah, quite a tough one there. But talk us through developments in the domestic commodities market.
Okay, in the domestic commodities market, prices are generally flat. If you look at our slides, you see most of the commodities that we cover are flat. If you look at the price of rice compared to December 2020, it is still flat at 30,000 naira per 50 kg bag. The price of a 50 kg bag of beans is also flat at 42,000 naira. Price of cement is flat. Most prices are flat. We are seeing slight declines in price of Gary. Gary is down 3.6% to 13,500. Also, Semovita is down. A 10 kg bag of Semovita is down 2% to 5,100. A few prices are also increasing, like price of yam is up. A medium size new yam is up 50% to 1,500. And a 50 kg bag of flour is up 3.8% to 21,500. So what we are seeing, I think, is a little bit of price stickiness, because I expect that compared to December last year and January, the demand conditions have changed. In December, we had festivities, so there was huge demand and the prices, increased. But now, towards January is usually considered like a dry month for hospitality or even for businesses. And
Right.
as a result, the demand conditions have changed, but the prices have not really reflected that. So that's what we call price stickiness in economies, in the sense that the prices are not adjusting fast enough. But also, this year is a pre-election year, and in Nigeria, we're very good with what we call stomach infrastructure. So
Right.
going through the year, I think that the price of commodities are going to, are going to inch upwards because of this huge pre-election spending.
All right. Okay. Let's look at global commodities now. How's it looking there?
So global commodities, all the commodities we cover are trending upwards. If you look at grains, wheat, and corn are trending upwards, mainly because of these geopolitical tensions between Ukraine and Russia. Because these countries are huge producers of corn and wheat, and because of the geopolitical tensions. I mean, over the weekend we saw a lot of troops, Russian troops, gather at the Ukrainian border. So there's threat of serious disruption, and that is causing the price of wheat and corn to trend higher. For cocoa, like I said, I also seen the price of cocoa higher because of strong demand coming from the United States and Europe, particularly as these first events are coming up. We have Valentine's coming up, we have Easter coming up, and these are huge chocolate events, and these events are simply driving the price of cocoa upwards.
Yeah.
And if you look at the price of sugar, also the price of sugar is higher. This is because of bigger demand, as the world opens up. There's more demand for big events like sporting events and so on, and that's why we're seeing the price of sugar,
Right.
rise up
Right.
at
And
the time.
I like the way you called that one the chocolate events for February. All right,
Yeah.
this is way. Thank you so much for coming on the program. A research analyst with Financial Derivatives Company. I will take a moment now.
Thank you for having me.